Welcome back, everybody, to another 21st Century Renaissance and another open interest newsletter breakdown on GameStop. I am your host, Dr. Michael LoPiano. It is blood in the water today after talking about tariffs and, as we'll see shortly, some beautiful groceries. Right? Markets naturally we're heading into the drink. But we saw this coming. We've been looking at this really weeks in advance, even just by looking at our options data. So we'll talk through some of that a little bit. Need to set the stage for our discussion of GameStop today. But what are we going to be looking at in GameStop today? We're going to be looking at some potential upcoming reasons, maybe overlapping reasons for a catalyst that is going to send us back up in the other directions. So that's we're going to talk through that, especially looking through Reddit user Region Formal's cat equity error theory with respect to GME price appreciation. So we're going to look at that, as well as go through our usual metrics for understanding our day-to-day and week-to-week price action. So that's coming up today. So let's, before we get started, obviously have to take a look at our do some gratitude. First off, thank you once again to Keith and Tabitha. Very delicious coffee, as always. Fervent Roasteries out in Colorado. Small batch, based on a passion for one another and a passion for coffee. So link is down in the description of this video. Let's see. Today's newsletter is brought to us once again by Kurt Lesko, Short Fridays. And we have as well to thank our monthly contributors, Dat Scruffto, Ken Wedmerlin, and Not Med Advice, who contribute every month to offsetting some of my data expenses that I incur throughout the year in order to produce these newsletters and videos. So thank you very much, and thank you very much as well to everyone who has supported, including... Thank you very much, Thomas. I really appreciate your support, and I appreciate everyone's support. So that's our gratitude for today. Always good to start the day off with gratitude. Really, actually do that. Even if, very happy to start my day being thankful for all of you. So yes, some beautiful groceries. Beautiful groceries. I think the real quote was groceries are old-fashioned but beautiful. Something like that, right? Just like one of those, right? So that I would actually always laugh about that, right? Because we have a lot of the fascism shriekers. Look, you might not agree with what Donald Trump is doing economically or in terms of policy or anything like that, but he's not a fascist, right? And so it's very funny to me, right? I did my PhD at Yale. There's a trend right now of saying America is becoming a fascist country. So a bunch of professors, including some of my former professors that I TF for, are leaving, as a protest. They're leaving America to go live in Canada, right? They're going to Toronto to go up there and make a scene about the whole fascism thing, that America is now a fascist state. Very interesting. I mean, very interesting to see that. And then from the very people, right? From the very people who study this stuff. To kind of throw that around casually. But in any case, very funny, right? Because one of the terms that comes up is something called Trumpism. But the real Trumpism, real Trumpisms is beautiful groceries. Abu Bakr al-Baghdadi is dead. He died in the night like a dog. They went after him with dogs, beautiful dogs, right? That's a Trumpism, right? And we're going to, it's going to be, what are the, Mickey Mantle or something like that. Any case, we have some of this. There's some uncertainty. Spies crashing. We thought something like this was going to happen. Right? I've been talking about this for weeks. The market has been generally, the options market especially, has been super bearish on SPY. We had this kind of brief reprieve at the end of March, which also we saw way out in advance in terms of the options data. And we've been looking at it, right? We can scroll down a little bit before we get to Region Formal, right? It's red. It's going down, everybody. It's gonna go down, right? That's, you look at this, you can't help but laugh. You're what makes you say that it's gonna go down, huh? Oh, all right. Well, What makes you say that, Mark? I don't know, maybe this? Just like, it's a pretty good bet, right? It's a pretty good bet that if you look at every single options expiry on the board, even the dailies on SPY going out for like every single one for the next year is all put gamma exposure dominant, you're probably going down. Like, it's, I don't know. I don't mean to be flippant or downplay this. You know, I try not to. I try to make sure that, right, you know, this is not an exact science, and you never know this for sure, right? Whenever you're approaching the future, predicting the future, you have to deal in probabilities. No type of knowledge that you can have for trying to understand what's going to happen in the future. You have to approach it with an epistemology that says there is no certain knowledge, and that's correct. There isn't when it's approaching the future, but dang, like, that's something to bet on. Hey, so that doesn't necessarily mean that we're going to have a red day today. In fact, I did talk about this a bit in the write-up. We might see something like we've seen with really big dips overnight in the past. The supposed DeepSeek dip. What was the other one? Oh, that was another tariff-related dip. Whatever the actual reason is, all of this stuff, like you saw, like you've been watching the channel, you've been following the newsletters, we've been talking about this stuff. This is all in the options market, right? This is all prepared. And then, you know, like, it's a thing that's decided in advance. This is why, you know, when I see this, it's like, what, you know, it was decided weeks ago that this would happen. And unless there's something that comes out as a surprise or something like that, this trigger was always going to be pulled, is like how it seems to me. So, I mean, I can't know that for certain. But when I see something like this, you know, I'm just a dude. Like, I look at these like two charts and I'm able to say, oh yeah, it's going to dump. Like, why? I shouldn't be able to know that. But in any case, right, what's going to happen, I think, today into tomorrow, do we necessarily see deeper dipping throughout the day? No, not necessarily. And it's gonna, there are two options expiries we have to take a look at, and that's going to be today's for the 3rd, the daily, and the 4th, so the weekly, heading in here, right? So just between these 2 days, actually, 28%, almost 28% of our total net put gamma exposure is today and tomorrow. So that was really quickly built out yesterday and earlier in the week. So if profit taking, because, you know, we're very close to open now. What last I saw, yeah, we're headed down to like 543. That's a big dip from where we closed yesterday, right? That's like 4% down or something like that. 3 and change maybe, because we closed. Yeah. That's like 3-ish and change. So there may be some short-term profit taking, because I mean, that's it. If you're doing a 1 or a 2 DTE and you get a move like that, like, I mean, take your money and go, right? So we may see this grouping, this really short-term grouping of puts closed. We may see some closures from traders, and if that happens in a large enough force, it's going to create this kind of, it'll push us back up a bit, right? So it may move us back up, say, to like 550 or maybe slightly over. So if we bump back here to our intraday to buy strike, right? So we're kind of like down here-ish. So we could kind of, I don't know, if we slip more in this area, we could kind of run back up here, back to like 550-ish, if we get a huge amount of put closures before, you know, then that'll allow for some repositioning at profit, repositioning down here for further expiries out, and then move down into April OPEX again, unless something happens that really changes this course. But that really seems to be the case. And if we look at, again, here, we're looking at the options market, this is weeks and months out. This is it's going to take a while for this to not be locked in place. Bearish into April OPEX seems to based on what options look like. This is our fate, right? It's like, options aren't 100% destiny, but SPY is something like this. The market is the Titanic, and April OPEX is the iceberg. It's like, there it is. We can see it. You're not going to miss it. Like, maybe you can try to affect how much damage is going to be done to the ship, but like, you're not going to steer past this thing. So right afterward, once we get all that put gigs off the board, again, right into late April or early May, we could see another recovery, just like we saw at the end of March, basically from post March OPEX into the end of the month, or kind of a little bit into March OPEX, and then through the end of the month, like we saw. But prior to that, that doesn't seem likely. So probably coming up, I think we talked about this earlier. Way back in beginning of March, end of February, we were kind of talking about this. Probably heading down, the next like really major turnaround would be in like the 510. So over the next couple months, I expect we'd see something like 510 kind of pop up, right? Maybe we get a little rally early May, late April, something like that. But ultimately, I think that's kind of where we're going over these next couple months. We'll see, right? We will see. We do have Bank of Japan to look at on the 30th of April. So, all right. So what does all this mean for GameStop? So we talked about yesterday, right? So historically, what this has meant for GameStop is super bad, right? If the market is vulnerable, GameStop's been vulnerable, and a lot of that has to do with GameStop's former balance sheet. That's no longer the case, and does not project to be the case going forward. So we talked about, okay, yesterday, what role might Bitcoin play in helping this? Well, okay, this is going to move GameStop. This is going to create new buyers in the form of crypto or Bitcoin ETFs. Now are going to be looking to acquire GameStop. Maybe they're going to be looking to do that even before GameStop announces a purchase of Bitcoin. Maybe they're going to wait until GameStop does something like that. In any case, that's going to change the way that there is demand for shares of GameStop in the ETF landscape. If GameStop goes down that path, that's certainly possible. That can hedge GameStop, or let's say hedge this kind of like ETF depreciation, outflows depreciating GameStop's price, during periods of market downturn. I've said multiple times, cool that they can buy Bitcoin. They didn't say they were going to buy Bitcoin right now. They just said that they, would use the proceeds to purchase investments which may include Bitcoin. They might. And so they put that in the language. There's nothing that says they have to do that right now. They can take this cash and sit on it. And really what Ryan Cohen has mentioned multiple times earlier, I mentioned this yesterday too, has been to target distressed investments, to target, it could be equities. It could be, things it could be value investing, right? And he's looking at somebody like Buffett. He's looking up to Buffett. This is the whole Burke, right? The Gameshire stop-away thesis. He doesn't have to use it to buy Bitcoin. He can buy something else. And in the meantime, while it's cash, GameStop is super, super hedged from downside, right? More than, as of right now, I mean, the market cap is like, with our current price in like the lower 21s right now, kind of pre-market and overnight, the market cap is officially like under 10 billion. So the market cap is under 10 billion and the company is 6.25 billion cash. So the company value, the value per share right now is 2/3 essentially, is 2/3 cash. This is a very interesting value. This has to be something that's going to attract, this may attract value investors to see like, what is going on here? But in any case, right, both if Ryan Cohen and if the company decide to go the Bitcoin path, or if they decide to go just the hold the cash, do treasuries, and wait for the market to bottom out for a year, right? Very interesting to see if wait, what if Ryan Cohen dangles the Bitcoin keys and does these offerings, and then while the market is dumping, he's just forcing cash inflows into GameStop. What happens when GameStop has 10 billion, right? What happens when he announces the next offering for $3 billion? I think MicroStrategy just did something like that. They announced a $3 billion offering or capital raise. What happens when he does that? And the price is still in the 20s, the market cap is 11 or 12 billion, and he's got 10 billion in cash. At some point, right? Like, something's got to give. So at what point could something give, and why isn't it giving now? That's a big question, right? We did get this announcement. They got the cash. They got the full 1.48 plus billion. It doesn't look like they've bought anything with Bitcoin yet. Historically, we've been trading at this 2x notional asset value floor. I've been talking about that recently. This GameStop has not definitively dipped lower than a price to book value ratio lower than 2.0 for more than basically like an hour. And that happened once last year and basically once a couple days ago, right? Once on Monday this week for about 30 minutes total during the day. So now, okay, GameStop's got the money. Well, okay, now technically we're below that now. Now we're like I said, right? The market capitalization right now is 2/3 cash, and the company has no debt, and the business is no longer a sieve for losses, right? We're not hemorrhaging money. The company is profitable on the year because of interest on this cash pile. Okay, so what's going on? Well, we also talked about yesterday why basically right now options market makers and convexity traders, people who are perhaps using these the embedded call option within these bonds, using this for arbitrage purposes, using this for convexity trading, are not necessarily incentivized to allow the stock to kind of trade around where the cash floor is. That this 2x NAV floor is right now in the 25 to 26 range. That's precisely where they're not profitable, especially convexity traders. So they like it in the lower ends of this range, and they like it in the upper ends of this kind of 20 to 30 range. They like it there. Market makers right now, their optimal profitability point is between probably 22.50 and 23 based on Max Payne assessment. So they're not necessarily incentivized to do anything to move the price higher. And of course, we have all of these accumulated FTDs. And interestingly, and this is what I want to point out today, if you haven't had a chance to check this out, cat equities error. So the consolidated audit trail is something that has become recently available. A user over on Reddit, we've talked about him here before in the past and on some of the live streams, but always worth drawing attention to Region Formal over on Reddit. So you can check out his post here. It's linked in the post. Linked in my article for today. Region's done a really great job looking at trying to test out a theory about GameStop's appreciation with respect to broad market-wide equities error. So cat equities versus cat options error data. And really interestingly, this was like a week or so ago, who provides this? Is it the SEC? I think it's FINRA. FINRA provides this data. FINRA refused, said that they were going to stop providing the total equities error appendix on the CAT publications, which makes the publications totally useless, right? These reports useless because this is how you find out. So they said they weren't going to do this. Region said he was feeling kind of down, and who came to the rescue? But many of the Superstonk apes went and mobbed FINRA and said, "What is going on? This is the whole purpose of CAT." I think they got in touch with the SEC, and sure enough, we got this data released. The appendix was released, and so Region Formal went and took a look at this. And what do we have for the end of February and the beginning of March? Well, wouldn't you know, we have a massive, historic number of consolidated audit trail equities errors around key dates that have to do with GameStop. So we have this cluster here right before a very large number, billions of share settlement equity errors here just prior to the date of the expiry of the old Bill Huang credit Credit Suisse swap expiry. So right here, just prior to this. The fourth was another deep. I want to say that was a big. That was a big dip in GameStop. Let's go take a look. I think there was another. There was a smaller set of swaps in there. I'm trying to remember exactly. Let's go take a look. We can take a look at our chart. A little chart action. Oop. Get in here. Let's see. Not quite. That was well. We did move down, but we dipped from. We had a new recent low. That's why I remember that. We had a new low that day because that was the first day we really went into the 23s. Yeah, we dipped overnight. So, yeah, so that was one. And then going back into February, so the 24th and the 25th. 24 and 25. So this was just after that big move we had. Yeah, this is when we started moving down, right? So we shot up here. Let me move in. Zoom in for a closer look. Cue that Spy Kids meme. Right? So we had come down, right? These Oklahoma patterns, as I called them, right? We talked about, we got this Oklahoma pattern here. And then how did we get walked down from these elevated pricings back in the 26s and 27s? Well, that Monday, boom, we teleported down. We had another teleport down back into the sub 25 range. So this was, supposedly there was something to do with tariffs here, but, no. Right. So huge number of cat equities errors on these two dates. Okay. So why is that important? Why am I talking about cat equities errors? Why does Region care about this? Why should you care about cat equities errors? Well, Region has been testing a theory for some time, and you can go check this out. In fact, if we bump over to his post here. So Region's found a significant number of equities errors across across these periods, and has seen that, okay, whenever you have this 6-day period in excess of several billion, certainly within 70 calendar days, you see a very significant appreciation in GameStop. So we have several of these periods which are very close together, right? We don't see that kind of tight, that same tight grouping. We did see some of that 2022, 2023, but certainly 2024, not, I guess, right. 2024, the last time we saw that kind of tight grouping was May, and then end of July. So that was around Nikkei crash, 30th of July to the 5th of August. So definitely 1st of May, very big return there. Very big return there. And of course, he's tracking peaks here. So we get some kind of peak in that range. Again, not super precise, but it is a signal that some major upward price volatility event is very likely coming within that range. All right. Not super, let's say, not super, what would you say, apprehensile, something like that, in terms of planning a trade or anything like that. But it is an interesting additional signal to pile on here with what we've been looking at in terms of swaps, right? Talking about, what the data Metroball's been working through recently, talking about what Richard Newton's been working through recently, talking about both in terms of swaps and in terms of this ETF musical chairs and FTDs. This is just another source of data that points to a very high number of signals that there's been all kinds of FTD manipulation, and that when these occur, there does seem to be a weak correlation between that and the possibility for a very large move in GameStop to the upside within that period. So we know things are going on. This may point to the fact that within the next couple of days, certainly we have some overlapping FTD windows. Maybe some clearance of these particular FTDs is coming up down the horn. So certainly interesting to keep some eyes on that. Go ahead, take a look through. I'd really encourage you to go take a look and read through Region Formal's various posts. He has a lot of these on cat equities error. So go take a look at that. Okay, so then what are we looking at today going into GameStop? Obviously, market is down. We've talked about this. But what about GameStop? Well, okay, we've got a lot of cost to borrow shenanigans. Price action yesterday, pretty mild, right? IV continued to grind down, but it, I guess, popped up regarding whatever's going on right now with tariffs. OI data, really kind of a boring options day. I guess, we had it pretty flat here. Kind of a boring options day in terms of what we were looking at. Not a lot of meaningful changes. The strikes where we did see some pretty big changes in terms of a couple thousand contracts here or there, right? Number one, not too many of those. Number two, pretty mixed in terms of sentiment. So by and large, market was pretty neutral. We did have slightly more profit taking on calls versus puts. And then in terms of the option chain as a whole, we're not seeing much movement in our max pain values. Gamma exposure also not looking too different. If we do see some really deep weakness in the market, there are put positions below us that would facilitate a bit of a quick rundown, maybe into about $20. But we'd really have to run down and spy hard, I think, to see a similar type of move. And as I said, I think we're probably looking today at a little bit of a recovery, maybe up into the 550 kind of area if we get these put closures in the short term. So that should, we could see some. I think this more or less says, okay, we're gonna maybe stabilize. Maybe today we trade between 2150 and 22, but I think this is more or less conducive for moving into kind of a pocket here, right between 22 and 23. Right, we have this kind of neutral strike here. That's going to work out super nice for the options market maker. They want the 23 position out of the money. 22s, there are enough puts, I guess, above here to make it meaningful to have these put positions out of the money versus these call positions. So under 23, but above 22, somewhere in that milieu, I think is probably where we'll end up if we don't get some sort of catalyst popping up. Now, as I talked about yesterday, if these cat equities errors data do combine with some sort of swap catalyst over the next couple of weeks, right, it's possible we have these kind of overlapping windows all kind of culminate in the middle to the end of the month, then yeah, we'll really start moving. Though it doesn't look like we're going to have one this week, maybe into the beginning of next week. I think Richard's been talking about the 8th as a potential day, but the higher likelihood ones are things that have to do with OPEX. And of course, we also have this signal, a little bit of Roaring Kitty tinfoil 420, which is a Sunday. I think I said it was a Monday yesterday. It's a Sunday. 421, of course, is going to be the first day that we have that. So I don't know. Maybe we see a little something from our guy there. Maybe that's the real catalyst. Maybe the real catalyst was the friends we made along the way. But maybe the real catalyst is from a different sort of cat. Maybe not something related to the consolidated audit trail. Or maybe, right, maybe they're connected, right? So again, right, not a lot of new stuff to, I guess, point out, hey, here's this date or here's this date. But it's one more layer of data we're looking at that's saying, all right, we've got some other potential factors coming up, culminating middle of the month. One more layer on top of our ETF musical chairs / swap related catalyst things going on in the background. And of course, the balance sheet on GameStop has never looked stronger. And I actually think it's a good sign that amid this downturn that we are, that we're seeing GameStop hold off and hold on to their cash, right? As we look here, it looks like the market's going to keep going down. We've talked about this for weeks now. I don't think it's going to stop, right? We had this brief reprieve. Maybe we get another brief reprieve, but yeah, it's not going to stop. So if we really get some very attractive prices on good companies, I don't see why Ryan Cohen wouldn't pull the trigger on some investments like he has in the past with Apple or with Baba, right? We know his personal money he's invested, made some great calls, especially with Alibaba and China banning short selling, right? Getting everything squared away there. So again, continues to be interesting. Going to continue looking at trying to get a more precise idea of what we might be able to anticipate on these swaps, on ETF catalysts, FTT catalysts, something like that. But something's brewing. So I have to keep our eyes peeled. look at maybe a quiet finish to the week. Who knows? Maybe something comes out of left field. Certainly that would be great. But until then, right, another great buying opportunity out there with GameStop sitting pretty at it's about 2/3 of its market cap represented by its cash holdings. So hope you guys have a great Thursday. Thank you, as always, for watching and listening. Look forward to seeing you guys for tomorrow's video. And yeah, of course, love getting your comments, questions here and on X. So we will see you guys tomorrow. Thanks very much.